Joining us to get the day started and to end the trading week, Scott Phillips from the Motley Fool. Scott, welcome. Look, we'll leave the Middle East for now. What I can say is another week, another record for CBA. What gives?
It's incredible, isn't it? So extraordinary. And look, it's not just the market, it's not just the banks, it's CBA in particular that's really driving higher and higher. And honestly, there's no easy answer to what gives. I have absolutely no idea why people are bidding these sort of prices for CBA. Now, if you're holding CBA shares, you've done very well, and that's not a very welcome sentiment from me. But I can't honestly justify the valuation either in itself, relative to the other banks, or relative to that market that I just mentioned. It has been absolutely up and to the right, and an extraordinary range for CBA. Yes, it is the best bank of the big four, no question. Yes, it's it's been incredible over the past 10, 20, 30, 40 years. But when you're at that sort of valuation and frankly, pretty anemic growth, it's a very, very tough argument to make, other than maybe some version of TINA. There is no alternative. If you want the income, if you want the banks, I guess you go to CBA. Even on the income front, the yield's falling dramatically because the price is rising, which again is a first-class problem, but you're not buying it for yield right now, or at least I presume people aren't buying it for yield right now. So yeah, I don't know. It's very, very, very hard to justify. Maybe a little bit of international buying might be adding some pressure to that one. There is some talk that if you're buying Australia or you're buying Australian banks, just buy CBA. Again, that would be reasonable if the prices were more similar. If the PE was lower, if the price was lower, if they were close to the other big three banks, you say, well, any bank's the same, I'll buy CBA. Right now, I'd buy any of the other big four rather than CBA. I don't know I'd buy any of them necessarily right now, but I definitely wouldn't be buying CBA. If I owned them, I'd sell them.
Okay, wow, own them, I'd sell them. That will be written down. Nice quote.
As a Friday morning start for you.
Yeah, there you go. The week started, though, with news that there is a potential foreign buyout of Santos on the table. What chances do you give this of being approved?
That's the approved is the right word, right? So this is exactly where we're at. So we're going to get approval from shareholders, and it seems like they're coming around. We've seen a couple of major shareholders basically say, yeah, we'll take the money. The Foreign Investment Review Board's got to make a call. Jim Chalmers is going to have to make a call on whether or not this one is in the national interest. And this is going to be a really, really tough one. On one level, resources companies of any company are the ones that should be least impacted by foreign buyers. Why? Because the resources exist here. The foreign buyers are going to pick them up and take them somewhere else, right? They are where they are. Whether Santos sells them, whether someone else that buys Santos sells them, the oil and gas is found here, it's sold here or sold from here. So they're really, and again, because the government controls the asset, they control legislation, regulations around it, there is no reason why, in my opinion, foreign buyers should be knocked back. It simply doesn't make any difference, right? Whether Santos owns it, Santos individual shareholders, or some other company's individual shareholders, it's not like it's a national asset. If Australia was selling it, as in the Australian government, Australian Commonwealth was selling it to a foreign buyer, maybe you've got some argument there. But I really don't know how this would be meaningfully challenging to be a private company in Australian and, by the way, international hands, or a private company wholly in international hands. It doesn't change the tax regime, it doesn't change the regulations, it doesn't change the national interest at all, other than the interest of those private shareholders, as I said. Whether it will be is a whole different question, right? We've seen a lot. Government's pitching in on Rex. They've trying to rescue Whale, the steelworks. Will it be seen as a national interest? Bit of jingoism, maybe bit of politics, bit of the reality of it's ours, we should keep it stuff. That's the political element. So economically, from a policy perspective, zero reason not to let this one go through if the shareholders do vote for it. But of course, policy and politics aren't always the same thing.
Yeah, right. Got it. Scott, where does this leave some of the other listed oil and gas plays? And I suppose now we can also bring up the Middle East, because Karoon is a pure oil play. It will benefit if oil prices rise. It did make a bit of an acquisition to get further exposure in Brazil, I think it is. But Woodside, still hasn't really hit its stride. Huge capex to come in Louisiana. Is this sector attractive to you at all?
Yeah, I'll answer the last question first, actually. No, but only because I don't love commodities. I don't love trying to forecast commodities. You mentioned the Middle East, right? There are so many different ranges of possibilities from here moving forward. Think about the probabilities, the old decision tree we learned in high school maths. Does the conflict continue? If it does, for how long? If it goes for that long, what is the impact on oil supply? If there's an impact on oil supply, what is the impact on price? There's so many of these you kind of stack back to back and say, well, how do you make a decision on the basis of that? Ironically, I won't say the worst time, but generally speaking, when the fear is in, when the tide's all the way one way or the other, usually not a great time to buy any company, certainly not a commodities play. So if there already are fears of higher oil prices, fear of conflict, fear of supply constraints, that would tend to push the price up already. In other words, the trade is done, the trade is over. Now, it doesn't mean it can't get worse, right? So I'm not saying it won't. But if you want to try and play those games, you play them on the flip side. You play them. You want to be selling when the price is high and buying when it's low, not vice versa. Even if you have a view on what happens next, because no one can know for sure. So, sorry, that's my phone. That's a terrible thing to do. I haven't done that in a very long time to do. My apologies. It's a terrible thing to do to try and make that work, right? You think about how you're trying to guess all of those probabilities in order and in context because someone else is taking the other view. So, no, I'm not interested in the oil plays in particular. Your point about Karoon and Woodside, though, was very well made. I think Woodside, probably one of the more disappointing companies of the last large companies, last 20 years. I mean, I've been doing this for a while, and it's been kind of the company next, most likely to XYZ. And for one reason or another, really hasn't, as you say, hit its straps, hit its stride. It's been a long time coming. Maybe look, higher oil price, of course, it helps. So that's going to be good. But operationally, structurally, of course, did the deal with BHP to buy BHP's gas assets, oil gas assets. Maybe that changes things. Maybe it gives them the heft or the size they need. There's certainly plenty of. We took serious politics. The politics of gas exploration and export has been so incredibly, high temperature. Maybe it falls because the ocean's over, but there's every opportunity for Woodside to do really, really well from here. Whether they can or not, that's an open question.
Got it. And just a thought on this market where it's likely to head this week down, it looks like, heading into Friday's session by about 0.25% over the 4 trading days so far. Is the ASX looking vulnerable to you right now, or all systems go?
You know what? I think we've got to expect volatility. I mean, did anyone expect an Iran-Israel conflict a week and a half ago before the first rockets were fired? I mean, it's always been possible, right? We could have said that for any time in the last 40 years, but not only 20 years. So, the volatility is always present. You throw on top of that, the Donald Trump, will he, won't he get involved? I mean, this thing could really escalate meaningfully. Even if it doesn't, the concerns around will it or won't happen is what's going to drive the volatility. So, yeah, I would suspect we'll get a sequence of relief rallies and then some fear selling as the headlines change, as the uncertainties come in, people try and take their positions. So, yeah, not just oil, by the way, across the entire market, because it really does reverberate from there. We know oil is so incredibly important for the global economy. That doesn't even need saying, but it's worth just highlighting, because whether it's the oil price, whether it's petrol, whether it's the fact it goes into planes and ships, everything we buy, the truck going to the fruit and veg market, the tradie coming to the work site, everything is driven by oil, at least until we electrify further. And so whatever happens there is going to have ramifications right across the global economy and, of course, here at home. And that's going to keep investors, frankly, on the on tenterhooks, worried about what comes next. Worth saying, by the way, speaking of total market, mate, we saw Vanguard, their ASX 300 ETF, hit $20 billion in funds under management. They announced it this week. That's big in itself. It's quadrupled over 5 years, 5 and a bit years, which is just extraordinary. So the change in the market, speaking about what investors are doing and thinking, the drive to passive continues apace. I don't think it's going to stop anytime soon. So you got that, as well as individual stocks, as well as the geopolitics. It's a fun time to be an investor, put it that way.